Some housing metrics are trending down. Prices are, well, we'll talk about that. Hey, this is Dave with the Bolduc Realty Group. Welcome to my weekly real estate market update. Today's April 7th. Before we jump into the metrics and what's going on in the Connecticut real estate market, please like, subscribe, ring the notification bell. Comments and questions are always appreciated. Throw them in the comment section down below. Thank you, Barry and Paul, for the comments over the last week. So key market stats, active on the market, 3,394 versus 3,449. That's down 55. So that's one of the metrics that's trending down. Inventory's down slightly as sales continue to be strong, and the number of listings that we were expecting to see hasn't really materialized. I do expect the number of active homes to go up as we go into the spring and summer, but there are some challenges that sellers are facing. First one is low inventory means that a seller, they need a place to live as well. So they sell their house, they got to buy another one, or they got to rent another one. Both rentals and homes for sale are in very short supply. So that's a challenge that people face, and I talk to people about that daily. Rate locked. There's a lot of people out there that have a 3% mortgage. They're facing 6.5% now. That's a big difference. So there's a couple of challenges that sellers are facing that are limiting the number of people that are putting their house on the market. We closed 2,100 houses in February, just over that, and we closed 2922 in March, so just under 3,000. So we have seen a little bit of an increase, which makes sense, but the numbers are still low, primarily because there's just not a lot of inventory out there. I do expect to see the number of closings continue to climb. Based on those March closings, we have about 1.2 months worth of inventory, so a very, very low number. And the median home price in Connecticut, well, we're going to get to that in a minute here. I want to spend a little time. What I can say is I spoke about this in my last video, and follow the data, not the hype. So some key dates here. More good news today with the jobs report that came out. So unemployment creeping down, job numbers basically in line with expectations. The slight slowdown in hiring is seen as a good thing for inflation. And all this relatively good news, the inflation, the spending, recent Fed actions and words, and certainly this jobs report should keep the reduction in the mortgage rate going. It's more welcome news for buyers. Consumer and wholesale inflation reports are due out next week. This is the jobs report that came out. The additional 236,000 jobs in March versus an expected addition of 238. So it's basically in line. It is a softening. It represents a softening because January and February were much higher in hiring, and this should be seen by the Fed as a positive thing. As the inflation slows and the job market cools down a little bit and spending moderates, hopefully the Fed will pause interest rate increases. I don't think we're quite at the point yet where we're going to see the Fed reduce the Fed funds rate, but a pause is certainly welcome. So as active inventory for single-family homes, condos, and multifamilies down 55 over the last week, and has been relatively flat for a month. So that's one area we're seeing some metrics decline. Interest rates are creeping down. It's another area we're seeing metrics decline. And after a brief climb in January and February, the days on hand, the median days on market for a particular house is down from 26 to 19. So that's another metric that's declining. What's happened to home prices? Home prices are up 4.75% year over year, March of 2022 to March of 2023. They were predicted to be flat or slightly down. Month over month, which is a metric I don't like because of seasonality, mix, and a few other things, but month over month from February to March of 2023, prices are up 4.5% in Connecticut. So as supply stays the same or shrinks, demand has remained strong, and it's going to go up as these interest rates continue to creep down and based on seasonality as more buyers come into the market. So stable or dropping supply with increasing demand is going to result in increased prices. This is pure supply and demand. The data clearly shows that sitting on the sideline, waiting for the housing market to crash and prices to come down is not going to work out well. This has played out over the last few years, and a really good example is Connecticut home prices are up over 40% since 2019. Something to think about. The primary mortgage market survey, we're down to 6.28% versus 6.32 last week. I got an email from a lender that I work with that the price, they've got rates in the fives if you buy down the interest rate. So rates are coming down. Mortgage rates continuing to ease as relatively good news and inflation continues to flow in. The jobs report is another piece of good news on the pile. The consumer and wholesale inflation reports next week, if they trend in the same direction we've been seeing, downward trend on inflation, then we could expect to see mortgage rates continue to come down. Let's hope for the best on that. That's all I got for today. If you have any questions, comments, please throw them down below. Have a great weekend.